The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, everyone. This is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And that's what the number is if you'd like to call in and ask any questions. Today's show, I want to talk a little bit about the stock market to start off with, and then I want to go into the lunar cycles that we've been talking about for the last few days because they seem to be working again, and we just want to double check them just to see if the reasons why behind them are working. We don't know for sure, but we're just trying to build a case for it. Now, the first thing I put into the Tiger TV today was the E-mini S&P on the daily chart. Now, we talked about that on Monday, the possibility that it could get to that 1355 level, which was a 61% retracement, and we got to 1357.75. We backed off from that level so far, so that tells us that it's a pretty good cycle. I think when we get into the second part of the charts this morning, you'll see the lunar charts and how they're fitting together, and I did them based on a regular lunar cycle. Then I also did them on a daily, using an hourly chart, so you can see how these things sort of fit together. That's really what I'm shooting for. Now, the chart that we're going to be looking at next in the Tiger TV is the NASDAQ, and we've had a pretty good rally coming off of the June 4th low, and we came very, very close to the 61% retracement last night. We still might make that, but there still should be a little bit of resistance up in this area. I believe, like Basil does, that this market, even though when it backs off, it's probably going to be a buy because it's handled such bearish news, so well. Everybody thought the end of the world was going to come in with Greece, and that certainly hasn't happened. And I frankly don't know if it ever will, but who really cares? We're here to, to try to, trade some of the shorter term things that we see in the market, so we don't have to risk an arm and a leg. I'm going to talk a little bit about the euro after the break because it's a real interesting report that just came out that really shows the diversity in the market. It's just really amazing, and that's what's so fun about it. Now, the next thing that I wanted to go into, and that is the cycle part of what we're looking at. I'm going to review because I talk about this almost every day, and so does Steve Rhodes. But the more you talk about it, the more it'll seep in, and you realize that these are just natural cycles. That's all they are. And we're just trying to show you that they do have some very good timing capabilities. There's one great caveat here is the darn things don't work all the time. You have to remember that. I mean, they're in the neighborhood of way above 75%, but there's sometimes when the darn things just don't work, and you just take your frustration pill or your, Prozac or whatever else you're taking, and just forget about it. Go on to the next trade. That's all it is. You just got to forget about it. That Tom's, comment is there's always another trade coming around, and that's what we're really looking for, and that's the bottom line. Now, the chart that I placed into the my mind is on the bonds. The chart that I posted in the Tiger TV today is the lunar cycle using the New York Stock Exchange Index, and it shows the new moon and solar eclipse that we had back on the 20th. And if you'll see that, it happened somewhere between the 19th and the 23rd. So I'm assuming it's the 19th because it should have come in on the 20th. The market went down and made a double bottom down on the 23rd. Then we rallied up into the 29th, and then we came hard down into the full moon lunar eclipse of June 4th, which was the major bottom. That was the one that, it looked. I really thought we were going to melt down into that one, but we just went down and made a newer low. And then from then we went up into the new moon that was yesterday, and so far it has held the market, and it stopped it right at the 618 on the S&P. It did. The NASDAQ was just a tiny bit weaker, and the Dow Jones also made the 61% retracement. Okay, we've got a call. Our first caller today is from Orange County, California. Garo, are you there?
Yes, sir.
What can I do for you, my friend?
I need your opinion regarding the gas haulers, the shipping companies. If you know any, or if you recommend any, or if you agree with the idea, or you say no, that's not a good.
Do you have one of the stocks that I could take a look at? You know, the major stock in that group, because I don't really follow stocks.
No, sir. Unfortunately, not.
Okay, so you're looking about the companies that actually haul the natural gas and stuff like that.
Yes, sir.
I couldn't help you at all. I mean, at best I'd be doing a wild guess, and that'd probably be wrong too. But what I will do is I will check around with some of the smart people that we have at TFNN, and I'll get a couple of these. And what I'll do is I'll cover them on the show for the commodity show tomorrow. If you'll be in, because I am going to be covering natural gas, of course, because it had that huge move, last week, and so we want to be watching it. I understand what you're talking about, because I happened to walk by the television set during the basketball game last night, and I heard a commercial from our president about natural gas, that we had 100 years supply of natural gas, and I frankly, if they keep the politicians that are in there, they'll have more natural gas than they'll ever want to have, because those guys are doing nothing. So, but I'll check this for you to see if it has anything. But most of the stocks, to me, even if we have a really good sell-off here, I really think that we're going to be chopping around and going sideways here until the probably end of July, 1st of August. That's what it looks like to me. And we had a Bradley date today, and we're certainly making a high. We're not making a low. And so this is what I'm assuming.
Thank you, sir. Thank you.
Okay, I will try. We'll try to get you the answer to that, though.
I appreciate it. Thank you.
Oh, okay. You bet. Okay. Now, we were talking about the stock market and the stock market cycle that we follow, which is that lunar cycle, which is nothing more, than the 14-day cycle. That's all it really is. And it's expressed by, from full moon to full moon is 28 days, and from new moon to full moon is 14 days. And so what I did was just to show you that you don't have to be afraid of some of these things, and just expressed it in a regular cycle so that you could look at it in the context of days. I posted it into Tiger TV. You'll see the cycle that's there from new moon to full moon, to the full moon at the lunar eclipse, and then again to the new moon that's occurring right now. And the next one is due, the next full moon, the next new moon is going to be due right around the 4th of July. And that's all it is. And what happens is this thing will work through 3 or 4 repetitions, and it'll be absolutely perfect. And then it'll go crazy. It'll go crazy for maybe 2 cycles, maybe 2 full moons, and then it'll get back in sync. Well, when Tom Pelk did his work, he's the fellow from Nomura Securities that went back from 1918 all the way through to where we are now. And he had so many samples. He had way over 1,000 samples. And he basically said if you used a bias of buying on the new moon and selling on the full moon, in other words, you're only in the market 14 days at a time, that you would outbeat the S&P 500 by more than 16 times over a period of 88 years. So the probabilities of you winning on doing something like that are very great. What we're trying to do is to match it up with timing and pattern, so that when these things turn, that you want to be selling on a new moon if you're in a bear market, and buying on the full moon if you're in the bull market. And that's what we're trying to do here. All I'm trying to show you here in Tiger TV is there's nothing to be afraid of. These are just days. There's nobody mysterious up there, wearing a wizard hat, talking about the moon's in the 7th house, and the Scorpio is aligned with Mars and stuff like that. That's not what this is about. This is just number of days, and we're looking at the cycle days of these things, and that's what we're looking at. Fortunately, we have a computer, that'll give us these days, and it takes out the esoteric part of this, so that you don't have to worry about it. Now, the question that someone always asks me is, okay, if that's the case, then why is it that all this other astrology stuff that's out there, you know, the horary astrologies where they ask questions, and the mundane astrology where they talk about, you know, the signs of the planets and also the houses where the planets are and where you were born. Folks, I really believe in my heart that stuff means a whole lot. But I don't believe it means a whole lot for what I'm doing, because I'm trying to keep it as simple as possible. It's the OKIS, keep it simple, stupid, and believe me, I'm trying to keep it in days. I've always done that. I've never done it any other way. I've, you know, always told people when I do it, that's all I'm doing is I'm looking at these different cycles. The Bradley model helps me a great deal. The P-index dates help a great deal, but it's just all probabilities. That's all it is. And I try to, you know, to tell people that, but, you know, that it's nothing more. It's not hard to figure this stuff out. It just takes time, and you have to realize that it's just a normal cycles that you're dealing with. And that's the whole presence of, you know, what we're dealing with in astrology. Now, I'm having a little technical problem with my Bradley model right now, but I'm going to have it fixed, I hope, hopefully by tomorrow, because I wanted to show you that bottom one we made on June 4th probably came in a week or more earlier than I expected, because I thought it was going to be about the 18th. And then from there, I think we're going to be rallying, not straight up, of course. There's going to be some really jagged moves up and down, but ideally we'll be chopping around here for 4 or 5 weeks into the till the end of July. So that's more like 6 or 7 weeks. And then at the end of July, the Bradley model again takes on a negative bias and stays negative for a very long time. And if you stop and think about it, you know, after the summer doldrums, we come into the most dangerous time of the year for stocks, and that's the September, October, because better than 70% of the time you have a major bottom occurring in that September, October, November period, the fall period. That's when you usually have those. So this is what I'm trying to do, is to give you a little, you know, heads up of what we're looking at. Now, if the market closes really strongly today and we blow out the 5860 level in the S&P futures, then I would assume that this new moon cycle is certainly not working. But remember, if this is a new moon cycle and it's a sale, that tells us that we're still in a bear market. And all we've done, if you look at the very first chart that I put into Tiger TV, all we've done is we had a bearish Gartley way back there in March. Way up around I think it was 1420, I believe, in the S&P. We came down to 1260 and change, and now we've rallied back to a 61% retracement. That's just another bear market rally, and it's also a Gartley sell signal coming in on a new moon. If that's the case, then, you know, that's what we're looking at. Originally, I thought that this new moon that we have on the 19th, because it was so big and the Bradley model was down into that time, would be a strong bottom, but it is not. It is a rally high, and that's why we were looking to sell it. 877-927-6648 for all your questions and answers on astrology. And we will ask Merlin the Magician when he comes back what he thinks of the bond market.
TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as you normally do with Tiger Dollars, but with this one-of-a-kind offer, you get over $1,000 in added value completely free. Each 90-minute live webinar usually sells for $149, and you get all 7 of them absolutely free. Tom O'Brien, Steve Rhodes, Basil Chapman, Larry Pesavento, Ken Shreve, Dave White, and Kate Stalter. You get all 7 classes completely free. Whether you're an experienced trader or you're completely new to the markets, this sale is perfect for all levels of investors. Don't miss out on our best Tiger Dollar sale ever. Visit the front page of TFNN.com today and purchase your Tiger Dollars before June 24th. Don't wait and risk missing out on this one-of-a-kind offer. Act now. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, good afternoon, everyone. This is Larry Pesavento for TFNN, 877-927-6648. I wanted to mention, the Tiger promotions that we've got coming up here. If you'll go to the TFNN website and take a look at them. Folks, I'm going to give you a little bit of my history here to tell you why it's so important to learn something. I mean, these are some really smart people that are giving these things. The only one is the personal exception of me, and I do all my stuff by hard work and error. I've never been able to follow that old Chinese adage, that the smart man learns from his mistakes, but the wise man learns from the mistakes of others. And this is what TFNN is providing you a chance to, learn from the mistakes of, professional people that have been around that have finally, gotten it right after many, many years. And every one of these folks that are on here has something good. And if you only get one good idea out of the whole thing, and you'll probably get quite a few, it's going to be worth the effort. Folks, I have well over 4,000, way over that. Probably closer to 6,000 books in my library, and that's not counting the trading systems, that I've had over the years. The value of it is way over $1 million of the original cost of it. I don't know what it's worth now, of course, but this is how I learned. I learned the hard way. I dug this stuff out. There was not a lot available when I first started trading. I think there were about 25 books. The really old books you couldn't find. Fortunately, I was able to find someone that collected these books, and that's how I learned how to do it. But there's a lot of great information that the folks here at TFNN have, and I think it's important that if you really want to learn some of these things, that's good. And even if you're an experienced trader, you can pick things up. I firmly believe that. I'm going to get off my soapbox. That's the end of my commercial for the day. And I wanted to talk a little bit now about the euro, because Laszlo Barini, who I respect him as a researcher, has come out with a report about the euro and how these the major Forex banks, how they're predicting what the Forex is going to do. The Forex, the euro versus the U.S. dollar, is going to do between now and the rest of the year. And I posted this into Tiger TV. And, folks, the ranges go from 140. BNP Paribas believes the euro is going to go to 140. And UBS believes it's going to go to 115. And so you have a really nice range there, as you can see, and that basically means none of them really know anything, and that's the whole premise of what we're doing with technical analysis. We don't know, and it's not important that we don't know. What's important is how we react to what we see. Because if you think you know what's going to happen, you're wrong. Nobody knows what's going to happen. The only person that knows what's going to happen is God, and she does not trade. She got tired of trading many years ago when she got caught in a short squeeze. However, remember that all of these people, even though they put out all of these reports, they firmly believe that that's what they're doing. BNP Paribas believes, by their looking at their economists and stuff and their models, that the euro is going to go to 140. UBS believes it's going to go to 115. Somewhere in there, there's going to be somebody that's going to be right. And at the time, no one will really care. So your job as a trader is to try to trade against, these big people, and that's what our job is. They do not know more than what you do. 100%. I can promise you that. No one knows where the market is going. No one knows how much you're going to make on a trade. So the only thing you can do is focus on how much you have at risk. And that's what patterns try to do for you. Steve Rhodes, Tom O'Brien, Basil, all these, Ken Shreve, Kate, they all put this into the risk format, because you don't need to know what's going to happen next in order to make money, because you can't know what's going to happen next. I mean, we've got the FOMC meeting today. Who knows what they're going to do? They might come out with a QE3 and a QE4 and a QE5. We don't know what they're going to do. So this is just part of what trading is. Once you accept that, you're a heck of a lot better off than these people they're doing it. Now, the people coming out with these reports, I think it's great. I did the same thing, guys. I came out with the trade of the year on bonds. I said I thought we were going to have a move up to the 151 level. It went a little bit higher. Stop was a little too close. I'm going to get back into it again one of these days. But that was my opinion of what I thought bonds were going to do. At the time that we did it, I don't think there were many people that were thinking that that could happen, but more and more people are beginning, to see that possibility. And it's important to realize, today with the stock market being down, the bonds should be up, and the bonds are down a full point. So that's the third or fourth time that you've had really bad news. Not really bad news, but we've had bad news, and the bonds have not responded to it. So that flight to quality scenario is not happening, the way that it looks like. So anyway, we have to take a little break to pay a few bills. When we get back, we're going to cover the bonds, and I want to give another 2 cents worth of what I think is happening there. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of tfnn.com.
Okay, we're back, folks, and the one thing that we want to keep in mind here is we had the Fed, I believe, come in and give some type of a preliminary thing, because the markets had a huge move. We dropped about 7 or 8 S&P points. We dropped about 60 Dow points, and the bonds moved up, a full point. Now, I posted into the Tiger TV the pattern that we were looking at for today in the bonds, because they had tested the 786 retracement again down at this 147.26 level, and so far we've had a $1 point move, which is equivalent to $1,000, in a really short period of time, and that's the Fed, talking now. I don't know if you would have been able to have any anticipation that they were going to say anything, because I happened to be glancing at the Bloomberg thing from TFNN, and it was giving a recap of what evidently Bernanke was saying. So what did he say? I don't know. I have never understood what these Federal Reserve guys are doing. I like to watch what the markets react to, but I understand reverse repos and all these other things. But frankly, when they talk, and no one could ever understand Greenspan. I mean, he was impossible. The words that he used and the sentence structure was just really horrible. And Jamie Dimon did a great job yesterday. He was there for 2 days and didn't say anything. I mean, it was just amazing. I mean, I couldn't believe how silly it was that they wasted this much time. But that's what we're watching now. We've had a pretty good move, down in the bonds from that 152 level and change. That we hit on the 3rd of June, right before the lunar eclipse. We dropped well over, 5 points. We rallied back to the 61% retracement, and now we've come down to the 786 retracement down here at this 147 level. Folks, if the bonds go below 147 in the September bonds, that's going to trigger that they've broken the first cycle high to low scenario. In other words, they've always made a low and then a high and then a low and a high. This time they would make a high, a low, and a lower high and then a lower low, and that would be telling you that the trend would be down because you'd have lower tops and lower bottoms. So 147 is the number that you want to keep an eye on for these Treasury bonds. I really believe this is the big market that is going to, be the one that people are going to be talking about for years, if not decades, in my opinion. Interest rates should start to go higher pretty soon, and from that level, we'll have a good idea of where we are. If you take a look at what Spanish bonds, and I know none of you folks trade those, nor do I, they got up to a yield of 7%. Now, can you imagine someone willing to buy a bond at 7% that has a probability of not making it? I mean, that just doesn't make any sense. At least with the U.S. Treasury bonds, they have a 2.8% yield, but they do have a better probability of making it. But, as the politicians get farther and farther along, this probability gets less and less because they keep borrowing money to pay the bills. And that's not the way it goes, folks. It's really all you're looking at. Now, we had to keep an eye on the U.S. dollar because you remember when we talked on Monday, we had made that big outside day down and we had our first major correction, and we were getting close to that 80-50 level, which is the level where we believe you're going to have a really strong support because that's the 61% retracement of the whole move. Now, so far we have not taken out those lows on the U.S. dollar, and that's telling us that, the euro might have, been topping up in this area again, but for the same reason, we really haven't done very much. It's really done nothing more than what it did on Sunday night. We've just gone down and tested that same level. So that's just telling us that there's some support coming in here in the U.S. dollar, which means that the euro, we were looking for the high in the euro to get up to that 128 level. We got up to 127.70, and that tells us that we might be very, very close to this, and this is part of everything that we're doing. Now, I wanted to mention, since we were talking about the bonds and how you watch the news and how it reacts to the news, how things react to the news is very, very important. Because if you get very, very bullish news and the market doesn't go up, it only has one place to go, and that is down. And if the market is very, very bearish and it won't go down with bearish news, it only has one way to go, and that is up. A perfect example of that was natural gas when we were looking at it down at the 90, 185 level. I mean, the whole world was bearish on that. It had been down so many weeks, it was making 20-year lows, and then in a matter of a few short, trading days, things changed, and it rallies, well over $10,000 a contract. So, this is where you must keep in mind that when you're doing pattern recognition swing trading, this is what you have to focus on, is how the market responds to the news. I'm going to be covering that in my webinar that I'm going to be doing on July 11th, and I'm preparing for it now. I'm going to have a lot of new things in it, and the little nuances of, how I look at trades, very similar to the way we looked at that natural gas trade a few weeks ago, and that'll give us a, better idea of, how I do, my trading. And being an hour-and-a-half webinar, you get a lot done. We got a call from Fairfield, New Jersey. Rob, are you there?
Yeah, how you doing?
I'm good. What can I do for you, my friend?
I was just wondering, because I was watching, the euro just dropped like 60 pips, I guess, on the news for the Fed. Would you, if you were short it, would you get out now? Like, how would you trade this? Or do you think this is the start of a long-term move for a couple of weeks?
Well, I'm basically, I thought that this, we talked about this Monday, that we would probably be coming into that 1355 level in the, the E-mini, and that's where, I was saying it would be a pretty good place to take a look at it, because we're going to be making a high on the new moon. It looks like that's what's happened because we've already dropped 17 points off that high. And I was watching the euro, but the euro was not nearly as strong last night. The euro couldn't even take out the highs of that we had Sunday night. But I never really got a good signal in the euro to get short. But I basically was using the S&P, and that's what I was watching.
I was short like 27, 1.2710. Does usually, if it goes down before like 215 when the Fed news comes out, does it reverse and go back up, or you never know?
That's absolutely never know, and the reason for that is they can change their mind. They're supposed to give out preliminary papers of what they're going to be talking about to let the people know, but they can be very surreptitious about this and not tell anybody what they're doing. The worst guy was Greenspan. I don't know if you know this or not, but Robert Greenspan, or Alan Greenspan's best friend was Robert Rubin, and Rubin was the CEO for Citicorp, and they used to have breakfast 2 or 3 times a week. And you can't tell me that sometime during that time that he didn't say to him, just say, gee, I wouldn't want to be short the S&P today. I mean, that stuff happens. Anybody that thinks that it doesn't happen is being very naive. So we never have access to that information. Other people might, but we don't.
So, like, when you get a huge move on news, do you always fade it, or you never know?
The only thing, I won't trade it until after the news is out and it's trading very, very freely. Then I'll do it. Usually 10 minutes after the news is out, you'll see that the market settled down. But into a news report, I'm out of the market when the Fed is in there. I just don't like to be there, and that's just the way I feel about it.
Okay, I had a question about bonds too.
Sure.
When you always talk about it's the 30-year bonds, right?
Yes.
Well, I mean, this is because I don't know anything about bonds. When you look at listings of bonds, it often, they use different numbers to list it.
Yes.
Like, you're always using just the futures bond market?
Yes.
Okay.
The reason why I'm doing that is that's the main one for trading, because it trades, about 600,000 or 700,000 contracts a day, and if you multiply that by the $100,000 value, you're trading a great deal of money. It's far bigger than the stocks that you trade. That's very liquid, and I don't do corporate bonds or high-grade bonds or stuff like that unless someone asks me to look at a specific one. But frankly, I'm just using it as a commodity that it is, and trading it that way.
Okay, and this might be naive again. I know nothing about bonds, but so. If you're following, as far as just general economics, is the mortgage rate the one that affects the 30-year rate?
Yes, that's right.
So the Fed says they won't raise their overnight bank rate until 2014 doesn't affect the 30-year rate as much?
Well, it will affect the 30-year rate a little bit, but usually not too much, because there's other things that are going to make the 30-year move, because other countries like China or Japan that hold a lot of our bonds might say, hey, I don't like that, and they're going to sell some of their bonds. So these are things that we don't know. That's why you try to look at the chart, try to find a pattern, that makes it seem like it's the place to go, and then just go for it. That's all I do.
Okay, so the 30-year would go up before the short-term rate, or basically it's not connected to it?
No, the short-term rates and the long-term rates are connected by the yield curve, but, short-term rates are nothing. I mean, you don't get any money at the bank now. You're getting like 0.25%. So the only thing that people can do is they can go out to 20 or 30-year bonds to get, higher interest rates. And then they also go into the utility stocks that are still yielding quite a bit, because they're making, there's still stocks making money and they're giving good dividends, but that can go away in a matter of a few days. But that's what people are doing. They're searching for yield, and that's the wrong thing to do, in my opinion, because I think the yields are going to go higher, so you want to get into cash. That's my opinion.
Okay, and thanks very much. I love listening to you.
Well, thanks a lot, Rob. I appreciate all those.
Educational.
Well, thanks a lot. There is a good. All the questions that you had were very good, and some of the answers, I don't have because I'm only watching, the notes and the bonds because those are the big markets. I mean, there's a huge corporate bond market that is tradable. There's a high grade bond market, the high yield bond market that Drexel Burnham and Mike Milken made famous. So there's a lot of different ways to use this.
Is there a good book to read about bonds, a basic beginning book, or?
Yeah, I don't know about a book. If you'll just, all you really have to do is to go online and Google, and you'll find some things. And then if you go to Amazon and just, click on a few things about beginning, learning to know about bonds, there's probably some very, very inexpensive books that are there, for you to learn that. And believe me, the cost of these books is not very much at all.
Okay, thanks very much.
That's good. And as he asked a question about the bonds and books and stuff, and this is one of the reasons why, people listening to TFNN and going into Tiger TV and, taking the courses and stuff, you get information like this that is important, and you see the different styles of trading that people do, and that's how I learned. I learned the hard way. Believe me, the hard knocks. I lost a couple $1 million, and this one, a couple $1 million was a lot of money. Several times when I was a young man, and it was not very much fun. And it's just one of the things that I learned the hard way. The good part was I always knew I could make it back because money was so easy to make. So I don't know. We'll see.
Thanks very much.
Hey, thanks for calling in, and I certainly appreciate it. Okay, I want to talk a little bit about the gold market because we have just hit a major spot that I tried to post in this morning. I got very, very busy, and I couldn't do too many things. It happened just a matter of a few minutes ago, and the market has already rallied $10 an ounce, but we just hit a 61% retracement in the gold market. We got down to that 1592 level. We talked about that on Monday, and we hit it just a matter of a few minutes ago because the beepers went off on my large monitors. And as I was talking to Rob in New Jersey, I wanted to bring that out. I wanted to put that into the den or into Tiger TV, much like I did the bonds and the Apple and some other things that I put in, just to give you an idea of what I'm watching, to see if these things are going to hold or not. Now we've got 10 minutes to go. There's going to be a commercial coming in, but we got one market, folks, that they're putting a shroud over, and it's going to be very important whether it holds here or not, and that's crude oil. And we really need to take a look at both crude oil and gasoline here, because if these give up, this is going to be the first time that they've been leading the things down, because gold has held so far. Silver's held so far. The grains look really good. We've had tremendous moves. In tomorrow's show on the commodities, we've really got to talk about that because those have been really monsters moves since last Thursday's show when we were down at that 509 level. The weather helped us out a little bit, and then the Chinese buying helped us out a little bit, but the market was heading up anyway, so it really didn't make a lot of difference. But we really need to talk about this crude oil because we're way below the 786 level at that 82.50 level. We're already $1 a barrel under that. We're trading at around 81.39, and we really have to take a look, because if it breaks really badly, this was the tip-off of how the thing started, way back into the 2008 level, if that's the case. Frankly, I think this is just probably margin call selling is my guess, but we really need to hold this level in crude oil around this $81 barrel level. When we get back from the next break that we take, I wanted to spend more time showing that, but it's going to take me a few minutes to refresh the chart because it came down so quickly that I really want to be able to look, because we have broken out on the downside of lows we made last week or so. We got to take a break here. We get back, we're going to spend some quality time on crude oil. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, this is Larry Pesavento winding up the show for TFNN. Remember, tomorrow I have a commodity show. We got a lot of things going on in those grain markets, and we have a lot of things going in the crude oil and gasoline markets, and I posted the gasoline futures chart into the Tiger TV, and you can see we broke down below the 786 level. Below that 82 level. We've hit it 3 or 4 different times now over the last several days at 81 and change. So if we close below, 80.50 or so in the crude oil, it's going to tell us this thing is breaking down. And, it really could still hold here, but frankly, it's major support, and it's going to have to reverse right away. Now, if we take a look at the gasoline futures, they look even worse. After we made that butterfly pattern way up at the top at that $3.46 a gallon level, we've now dropped 90 cents a gallon and we gapped below the 618 retracement down there at the 2.83 per gallon, and the prices, continue to go down. We're making we've already taken out the lows of June 4th. That was a pretty significant low in the gasoline futures. We've made a small little butterfly pattern on the downside here. So if the crude oil can hold this 81.50 level, and we can hold the $2.55 a gallon level in the gasoline, this might be a tradable bottom. And frankly, the stock market, we had a big drop off when the Fed said something, and the market came right back. The bonds had a big move up, and then they're starting to sell off again. So it's just a matter of looking at some of these short-term swings and just trying not to get totally massacred by it. But that's the main thing. Now the gold is held up really well on that 1592 level. That was a perfect 61% retracement. However, silver, on the other hand, it's a wicked stepsister, folks. This thing doesn't want to go up. Whether that's related to the demand for silver on an industrial basis or for jewelry, I'm not sure. But silver's not the one to buy. I mean, gold has been going up, making higher bottoms, and silver has not been able to make a few higher bottoms, but it's certainly not going up at all. So this is the line in the sand for gold, 1592, and if we break below $27 an ounce in silver, that's going to break a whole lot of support. That would be equivalent to breaking the 80.50 in the crude oil market and breaking below $2.50 a gallon in the futures market. And the reason why we're following these is because this was one of the things that tipped off in 2008 that the market wanted to go down. There's another caveat here, and that is that we're over this period that's very, very active. In the Bradley model now from today, all the way into the end of July. Our next really good Bradley date is not until the 27th. It's another, I think it's a week from today. Yeah, it's a week from today. So we'll have to, kind of keep an eye on that, and we'll pretty good, a good idea. The stock market, if the S&P turns around, and the futures S&P, the September's trading right now at 1347. If we close above that 1360 level, that's telling us that this new moon cycle that is here is not working, and there's nothing you can do about it. But if it is working, we should be down for several days, at least three days down after a move like we had, and then we will reevaluate it at that time. That's what we're doing, is trying to find some of these shorter term swings to grab some money from. So the key today happened during the break, and that was when gold went down to 1592.50, and that was the exact 61% retracement off that last major low. And as you can see, somebody had some baskets out there wanting to buy gold at 1592. That's all I can tell you. If it goes below that, those baskets will be empty. Okay, folks, see you tomorrow on the Commodity Show, and may God bless.